What is going on, investors? Back again. Time to talk about Nikola Motors, ticker symbol NKLA. At one time, this was the darling stock of Robinhood investors. And quite frankly, here on YouTube, all the quote-unquote stock gurus were giving you daily updates on this stock. And boy, they sure have gone quiet over the last few months as this stock has taken an absolute beating, down 5%. In the regular session today, during the after hours, after Nikola reported quote-unquote earnings, we're up just slightly. This stock still has a $7 billion with a B valuation. When we jump into the earnings, or really the net losses here, we'll see if that's even close to being justified. And then finally, we'll jump into the stock chart to see if we can see anything there. This is a press release company, okay? When we jump into the earnings, or the lack thereof of revenue, this stock is really in the business of putting out press releases and keeping investors excited about the stock. You've seen just over the last few months, the interest in this stock has just fallen off a cliff. Obviously, the CEO, the founder guy, got booted out. They've had some problems with GM, with that partnership. And it's just been an absolute disaster for Nikola. They're basically a press release or kind of a Photoshop company. If you look at, we can come up here and look at the cool little photos that they have and the photos of their truck. But the bottom line is what matters to investors. And hopefully, if you invested in Nikola at a higher price, don't take this as a beat down. Just take this as a learning experience. And hopefully you learn some things so you don't make this mistake again, because these types of companies come up all the time in the stock market. We see here for the last 3 months, 19 over 20, we have absolutely no revenue, no gross profit. Even for the 9 month, these are in thousands. We had $23,000 in gross profit for the last 9 months. There's probably a kid down the street making more selling sneakers on StockX than Nikola has made over the last 9 months. So it comes down to our expenses. We see here they've accelerated. We were at 13 million in the previous period, up to 117. For the 9 months, we're at 235. So these are accelerating rapidly. I'm sure if I brought over quarter, they are accelerating, because if you times this number by 3, you're in that 330, 360 range. And that's well in excess of where we're at for the 9 months. So we're accelerating these expenses. Obviously, they're developing a product. I understand these things. And so net income down here, net loss, we've got a 117. It's really just pulled down. They're not paying any income taxes or anything like that. The other thing you need to be aware of is take a look at the dilution. We went from 260 up to 377. That is like 117 million shares added to the weighted average. That's just a phenomenal amount of dilution over the last 9 months. You see it's up quite a bit as well. Just an absolutely phenomenal amount of dilution going in. That's what happens with these companies. They get you in on the hype, then they release a bunch of shares, and those shares just get sold off into the marketplace, and it typically does not end well for investors. Now, moving on to the balance sheet, let's see how well capitalized. We saw that they're losing about a shade over 120 million every quarter. So if you want to annualize that out, you're probably at 400, maybe close to $500 million run rate on this. Guys, it does not look good. Cash and cash equivalents, I know it's at 907, but if they don't bring any meaningful revenue into the company, which I doubt they're probably going to do, this cash will continue to dissipate over time. They do have they used to have a turn note, nothing really going on the liability side. Again, this company just went public. When we look at cash flows, we'll get a better idea of that. So we've got 9 month ended here cash flows. We pull down that net income number here of that 237. We can add back some things like stock-based compensation, depreciation, some other stuff. We get to very, very negative cash flows for 9 months at 84 million. Call it 85. We were at 65 in the previous period. So those are accelerating. We've got more cash flows out of the business for investing activities, about 15, although that compares relatively favorable to the previous period. Now, here's where the business is. The business is putting out press releases, getting the stock to go up, putting out maybe a PDF or a Photoshop, presentation of the truck that supposedly is in production. And then finally, though, here is is our PIPE financing came in at $600 million. Proceeds from the stock warrants came in at $260 million. So you see they earned nearly $1 billion from financing activities. This is where all that dilution comes from the shares. So right now, this company is not making any money except by selling the shares of the stock and by fundraising. That is typically a recipe for disaster for shareholders, and that is exactly what we've seen here. And so, look, I did a video earlier today on Plug Power. They're kind of in the same situation, except they actually have a real product. They have revenues. They're generating lots of losses. They're still generating lots of their income, and kind of the balance sheet is propped up by this share raise. So, you know, in my opinion, 9 times out of 10, these companies end up being a disaster for you, the common shareholders. They just don't work out, which is why I just simply avoid all these press release kind of, you know, hope and dream type companies. I stick with the Apples, the Netflix, the Googles, the Microsofts, the Facebooks, the companies that are really doing things. I don't necessarily need to be early. Maybe Nikola turns it around. Maybe a stock like Plug Power turns it around and it really is a great stock to own. Well, I'll come in there and buy it at some other time. So moving into the stock chart, you know, quite frankly, we've kind of channeled out here with Nikola. So, you know, the bad news is kind of really drained out of the stock. And now we're just kind of channeling here. In fact, we're right on the lows on this stock. And some people might say, well, maybe you can come and step in here and buy. We're doing a bottoming formation. Maybe you can say that, maybe not. What I've seen a lot of times with these companies that were once high flyers, kind of darlings, well, they bottom out and they stay flat for a while, and you miss out on a lot of gains that you could have had being in other stocks and other investments. And so even from a speculative position on this one, I'd rather just be in Tesla, or I'd rather be in some other stock, just because this just does not look like a positive trend from a longer term perspective. You are in a massive, just an absolute massive downtrend with this one. And I just don't necessarily see anything turning around it anytime soon. This 50-day moving average here in blue line should provide some resistance on the way up as well. So this one, I think, will probably stick in a range between where it's at now at about $17, $18, $19 per share, up to about $25 per share. If you want to sit in here and bounce this around and trade it and kind of swing trade it, I don't got any problem with that. But these types of companies just don't typically end well for investors. If they do, you'll make a little bit of money, but chances, in my opinion, this is not a repeatable type of investing strategy. That's really what you come to a channel like this for, is how do you develop a repeatable investing strategy. And while maybe you do well on a Nikola or a Plug Power or one of these other kind of high-flying stocks that really catch the attention of really kind of the novice, kind of beginner crowd, well, yeah, maybe you do well with one of them, but how do you repeat that again in a month or two, or again next year, or the year after, or for 10, 20, 15, 30 years in a row? It's just not something. Think about all the great investors out there. How many actually do that strategy? And I will tell you, none of them, absolutely no great, wealthy, big time, rich, old investor does a strategy where they come in here and buy these high flying stocks early. So it just doesn't work out in the long run. Now, can Nikola turn things around? Absolutely. Do they have a $7 billion valuation already on a company that doesn't have any revenue or profit? Yes, and that is going to keep a lid on the stock. And they also, as I showed you, are diluting you very, very rapidly on these shares. And I actually don't expect that to cease anytime soon, because these revenues, even when they do come in, are going to be offset by more research and development, more expenses that this company is going to have. So that's Nikola. Not trying to eviscerate it. And certainly if you own shares of this one, you've already kind of taken a beating, so you don't need me to rub salt on the wound. I'm just helping you understand how the market interprets these types of things. This was, in my opinion, more or less a pump and dump, and we're seeing the dump. At some point, it starts to flatten out, but will investors be interested in this stock when they do have a viable product, when they do turn things around? I think that's a question that everybody has to ask, and one that is very difficult likely to answer at the current moment. So that's Nikola, NKLA. Hopefully you guys enjoyed that one. Leave me a comment down below. Maybe you're more bullish this one than I am. Hopefully you guys have a great day. Good luck with your investments.